bringing back the billiton to BHP and listing it in Australia will make it a bigger part of the market. But look, overall, I think the markets over the many years that we've had the dual listing, we've gotten quite used to the fact that there's always been somewhat of a discount one way or the other, especially towards the UK, primarily because of the franking credits that you can get here in Australia and you can't there in the UK, and also just minimal currency movement. But look, overall, it's going to save them a lot of money, and that's really the crux of it all. They're going to save that dual listing expense of going through all the necessities of dual AGMs, etc. And that's really what's going to be the saving. We got quite used to the differentials between the two trading stocks, one on London and one here in Australia, and no doubt we'll probably miss it when they're singly issuing from Australia.
Hi, David. It's Matt here in Singapore joining the conversation. I just want to get back to the outlook. How confident are you that the demand story will hold up as we progress over the rest of course, the reporting year? BHP, as we've been talking about, maintaining those full-year targets. But given everything that's happening in China with the property sector and the concerns around Evergrande, how much of a concern is that for you looking forward out over the full year?
Look, certainly at this stage, China is posing probably a near-term problem because of what's happening in their property sector. One big developer going close to collapsing brings on others that are doing exactly the same thing. And property is quite a big part of the Chinese economy. So yes, we're going to have to watch that very closely. If there wasn't infrastructure spending around and money still going into those programs, then we would suggest that the iron ore price would probably continue to fall and not stabilise where we've seen it. But it is really that infrastructure spending. We do expect that China's going to be able to fix its property one way or the other, either by injecting a lot of cash or by, unfortunately, just making the whole thing go away. But infrastructure spending is more broadly in place, and that's what's going to, we think, continue to drive the iron ore prices higher, especially longer term. China will fix its property sector. It fixes everything else one way or another. And then we'll get the bonus of a fresh property outlook in China, the infrastructure spending coming through in the demand for steel, then the demand for iron ore. So we're fairly comfortable longer term that we'll see very good iron ore prices above where they are now. Maybe not quite challenging the highs, but certainly we can look to those at some point in the future.